initiative for the employee, but for the employer, it is an additional compliance burden every month. So if you are an employer, then this video is for you. Hello everyone, I am Neha from Webtel. In this video, I am going to discuss the practical aspects of ESIC return, salary and ESIC calculation, checkpoints and the return generation of the ESIC return. So stay tuned, and before starting this video, I request you to subscribe our YouTube channel Webtel Electrosoft to get regular compliance updates. Before the preparation of the ESIC return, firstly, we will have to check its eligibility and the checkpoints. So for this, I am taking you to my screen.
So let us now understand the ESI return filing process. But before going to the ESI return filing, firstly we need to know how the wages for the ESIC are going to be calculated. So as we already know, for ESIC contribution, employees' gross wages are going to be considered. Both employer and employees' contribution is going to be calculated on that basis. And for that, we need to know that there are some components which are excluded from the ESIC contributions. So for that, some of them are listed on the screen, as you can see up here: leave encashment, overtime, incentive, and so more. So here we have an example of Mr. Aman, who is receiving a pay of 24,000, including some of the components which are not the part of ESI wages, incentive and overtime. Now as you can see, the total gross earnings are 24,000, but when checking up for the ESI eligibility, two components have been excluded and the wages considered are only 16,000, making him eligible for the ESIC contribution. So whenever the contribution is going to be calculated for Mr. Aman, here are the rates: employer contribution at 3.25% and employee contribution at 0.75%. So whenever the calculation of ESI contribution is going to be done, it should be contributed, or it should be calculated like this, on 16,000 only. Now as you can see up here, employer's contribution is at 3.25%, amount comes up to 520, and employee's contribution at 0.75%, which makes it 120 rupees. Now let me show you how the software is going to help out in working all these calculations. So this is the HR Pearl software by which we are going to calculate the ESIC return or ESIC deductions. So firstly, we are required to make some configurations in that. Configurations like we have to put in the eligibility criteria of ESIC over here, and we have to mention the contribution rates for both employee and the employer. Now once these rates have been provided, we need to mention those pay heads also, on the basis of which the ESIC wages are going to be calculated. To do that, we would have to go to the customization tab, and in here every pay head that is created into the software is listed over here. We only need to tick those check boxes which are going to be considered for the calculation of ESIC wages. Now just as the example, we are not considering the overtime and the incentive for the calculation of ESIC wages, so we have excluded them, and the rest we are using have been enabled for the same purpose. Now once this configuration has been done, and in the employee master where the ESI eligibility for those employees have been mapped at yes as per their salary eligibility criteria, then what happens is employer needs to process the salary. Now whenever the salary of an employee for a month is processed, ESIC is calculated along with it. So let me show you how the salary process has calculated the ESIC for the employees. So this is the salary process screen. Now in here you can see that Aman employee has received a gross earning of 24,000 in the month, but he has been deducted an ESIC of 120 rupees. And if you want to see the details of that 120 rupees, we would have to go to the compliance reports, wherein we can view the monthly statement by which we can check how the ESIC is going to be calculated for which employee. So we have selected the employee, and now on the desktop I am saving the file with the name Aman, and in that file you can see that the ESIC wages considered for the calculation of contributions is considered as 16,000 only, and not 24,000. So this is the ESI number of the employee, name, days payable, wages, employee contribution and the employer share also. You can view both the details in there. So once the calculation of salary has been done, the contribution is calculated, and after that in the software you can post the salary. Now after the posting of the salary you can generate the ESIC Excel file. To do that you would have to go to the compliance reports and click onto the e-return. But whenever an employer wants to know the amount of contribution to be paid in the challan, he can view the details over here. In the deposit challan, select the month and year, and then you would have to select the employee and click on calculate button. You can view the details of the amount that are required to be deposited in ESIC challan at the ESIC portal. So this is how you can view the details of how much amount is going to be deposited, and if you want to view the details of bifurcation of that amount, then you can go to that Excel file you have downloaded through the monthly statement of ESIC button. So once you have downloaded this file, once you have known the amount of challan you need to deposit onto the portal, what we need to do is submit the Excel file on the ESIC portal wherein the monthly wages are explained, and as per those wages the portal automatically calculates the employee and employer contribution. Now let us understand how that Excel file is going to be generated through the software. So for that we would have to go to the compliance returns, e-return. Now in here again the selection of month and year is going to be provided. Then you can select the list of employees for whom you want to generate the return, click on the load data and then generate the Excel file. So this is the Excel file that has been generated. Now as you can see upon here, there are two sheets available. First one is the instruction sheets, and then there is the detail sheet wherein the list of employees along with their eligible wages are entered. So this is the file which is going to be uploaded at the portal. Now if you have noticed, there is no contribution of employee or employer in the file. So the portal is automatically going to generate the challan wherein the contributions of employee and employer both are provided in consolidated form. So once this file has been uploaded at the portal, you would have to click onto the generate challan button, and once the challan is generated, the employer can view the head count for how many employees, what amount has been paid, and as per that amount, what amount of contribution is going to be deposited by the employer for both the employee and the employer. And again, if you want to generate and if you want to view the details of the employee and employer contribution separately, you can go to the monthly statement in the software and view the details also. So let us just recall the process of how the return is going to be submitted at the portal. So the first step is to calculate the gross wages or the total earnings of the eligible employees. Second one is upload the wages of eligible employees onto the ESIC portal. Then the portal is automatically going to calculate the employee and employer's contribution and generate ECR. So the employer is only required to submit the challan payment and then the return. Now after this, the process is going to be completed for 1 month of ESIC return. So let us just consider one more example wherein the employee has got a raise and his ESIC wages are above the ESI eligible criteria now. So what happens in that case, that if there is any increment in the employee's wages that are eligible to be considered for ESIC wages, so the rule says that in any month of the 6-month span, if there is any deduction of the ESIC being made for any employee, so he would have to get the ESIC deducted until the completion of that 6-month span. So it means that if there is any deduction being made in the month of April, May, June, July or August, the employee is still required to get the ESIC deduct until the span of September. So once the span of September month completes, after that the eligibility of ESIC is recalculated, and once the employee has found not eligible this time, then the employee is not eligible to get his ESIC deducted. So let us just consider this using an example. So we have Aman over here whose salary is now increased to 22,000. Now those 22,000 are the ESIC wages which has been increased. So as per the law, he is not eligible to get the ESIC deducted, but because he was eligible to get his ESIC deducted until August, therefore he would have to get his ESIC deducted for September month also. After the September month, the first half is going to be completed for the financial year. Then in the October month, the ESIC is going to be calculate the eligibility again. And if he is found not eligible this time, so next half year he is not be going to deducting the ESI. So as you can see on the screen, 22,000 value is going to be used for the calculation of ESIC contributions for both employee and the employer. Now, how you are going to calculate these details onto the software? So let me show you how. So in the software, I have already mentioned the details of the increment for the month. Now we have the 6,000 raise in the salary, and when we have calculated the salary, you can see that the increased salary has been received by the employee and the ESI has been deducted at 165 rupees, that was calculated on 22,000 rupees. So if you want to generate the monthly statement also, you can get that also. So for that, again we are going to get to the compliance reports monthly statement, and in here we have to select the employee and the month. Then we can generate the Excel, replacing the existing file. So you can view in the Excel file that for this time the existing wages of the ESIC has been raised up to the new limit. So this is how the contribution of the increased salary are going to be made. So once this is done, what happens in the next month, the software is going to auto calculate the ESI eligibility for all the employees, but that auto calculation is going to be done only if the auto calculate button in the statutory part has been selected or enabled. If this auto calculate button is enabled, only then the software is going to recalculate the eligibility criteria for the employees in the second half. If it is not enabled, in that case the employer is required to go to the employee master and disable the ESI eligibility for all those employees who are not eligible for the ESI deductions in the second half. So now when the software has automatically selected to the non-eligibility of the employee, we are just required to go to the posting of September month, and then we are going to calculate the salary for the October month. So let us just see how the salaries are going to take effect and how the ESIC calculations are going to be done for the last month. So now we have to select the employees, clicking onto the calculate, and the software is calculating the salary for the selected employees. So in here, there is no deduction of ESIC in the specific month because the software has calculated the eligibility and no employee was found for eligible for the ESIC. So there is no deduction for the ESIC. So this is how the eligibility and the calculations of ESIC are going to be done into the software. And again, if there is any person whose ESIC was deducted for the said month, you would have to generate the ESIC return using the compliance reports e-return. And before going to e-return, if you want to view the details of the challan you need to deposit, you will have to go to the deposit challan. And if you need to know the bifurcation of the challan amount, then monthly statement is there. You can view the details of the employee and the employer contribution separately, and as per that you can deposit the amount onto the portal and submit the electronic challan cum return file, that is the ECR, and the process of ECR file generation and filing is complete.
I hope you have understood that as an employer, you have to prepare the ESI return every month, but it is difficult to maintain the salary structures with the eligibility of ESI. The software can ease your task with the applicable laws and different type of settings. So share this video with your employer friends if you want them to know about the benefits of ESI and its calculations. So I'm sharing the link of the previous ESI video for better understanding. If you found this video helpful, then visit the link mentioned in the description below and let us know in the comment section. Also, you can comment if you have any doubts. Give a thumbs up and subscribe to our YouTube channel. Next Tuesday, we will be coming up with another interesting video to make compliances better for you. Till then, stay safe and stay tuned with us for a better compliance journey.